welcome back to the ThetaWave Trader. December 2nd, we're back in action again, doing well. Hope you guys had a great 6 weeks off, because I certainly did. Thanks for keeping in touch with me, you guys out there. Love you all. Thanks for making sure you keep an eye, make sure I'm safe out there. It's nice. I hope you're all well. And welcome to the show, man. This is it. We're going to be sticking around here for next couple of months, and just kind of trading the market as we go. So let me get my channel up here and make sure we are live, and we are. Got to make sure that sound is off there. Yeah, we're all good. It's just little old me watching. Well, some of you might pop by. When you do, thanks for coming by. I'm excited to be back. Kind of miss the excitement. Hadi, good morning, my friend. How is Toronto? It's good to be back. It's been a whirlwind year, let me tell you. It's been crazy. The wedding went amazing. It was they looked like a couple of movie stars. They looked amazing. Absolutely amazing. So yeah, it was super great. Super great. Oh, that's turning. Don't like that. Already taking a high. Stop losses here. Already taken 3 off. I had 6 on here. Took 3 off here at this premium array here. How are you guys doing? How you doing out there, Hadid? How's everything working? See you guys in I've been trying to keep in abreast of what you guys have been up to while I've been gone, and you all seem to be doing quite well. So that's excellent. It's good to hear. You guys are keeping to it, sticking to it. I like it. They just came back and filled this here. Didn't have a break of little market structure, which is good. So I still want to see this hold and keep pushing higher. This BISI here coming back to refill that. I'm good with that. Let's keep pushing higher. We're trading above here, looking for a run through this level, and I'm still looking for up here at about 25,630. If you go back to the hourly here, I'm looking up here. I'm looking for this one. And if we can get through that, then I'm hunting up here and looking for the equal highs and potentially higher. But right now, that's my next target, 630. How you been doing out there, Hadi? How's everything going? You're well. We'll kind of just roll through some of these. This is a 15-second chart, by the way, so I'm going to get back to the 1-minute chart, but you can see what I'm looking for here. I wanted to get in off once this low was taken here. I wanted to see us create a fair value gap, get above that, and start running back into this range here. And then if we can pop out of that, then looking for a higher hourly objective. So all the time we can stay above here, which is where my stop loss is sitting. That's why I want to see a price continue to run higher. Pretty good. How was your trip, Hadi? It was amazing. Amazing. I've got the best partner to go traveling with. She's awesome. The people we met, the Thai people, I just want to say they were amazing. We made some new friends over there in Koh Lanta. Got to meet some old friends of Carlos. Oops, I almost dumped my coffee. How would that have been? Hey, dump my coffee, start my year off, or the end of the year off with frying my computer again. Not like we haven't done that before, hey, Hadi. Yeah, so we met these great people. I met Harry out there. He's interested in doing some trading as well. So I don't know if he's tuned into the show this morning, which is like 7 o'clock over there in the evening. But yeah, if you're with me, Harry, good to see you again. Just type in on the side there, say hello. I'm always happy to see you. This is the kind of thing I was trying to show you over there, Harry, about this lows taken. Look for that setup, that reverse pattern setup, trade back into it, look for a run higher, look for I never give you an opportunity because your computer died. It was literally like I was teaching in this one where once you see a low get taken, we look for this reversal setup. And then, as I said, as soon as it comes into peak, his computer died. I was like, oh, you're going to miss this one. So anyway, I've got him onto Michael's stuff. Hopefully Harry's learning all the ICT stuff so he can understand a little clearer what it is we talk about every morning. Peter! How you doing, Peter? How you doing? I hope you're feeling better. You can sit up a little better in the chair. That's good to hear. Your back's going to be repairing, healing. That's what I like to hear, man. Okay, so we're through here already. And we're through here. So if this taps here, rolls over and starts coming lower, we're going to close that out. Because that right there, trade back into it, looking for a run below here now. So we just got a little slightly higher run. We did not stay above this, come back and just tap it. So you got to kind of give it this internal range liquidity hunt, and it's already ran through the discount box from the premium to discount, ran right through that, came back, tagged it. That's our continuation pattern. So now we're looking for this continuation, and we're looking for this low to get taken here. So look for the rejection block and this low. And if we get below that low, come back and use this breaker here. Takes out that high. This breaker here is support. We're looking for another run back down into this range. Yeah, I got myself a Herman Miller chair to get through the morning, doing better every week. Ah, Peter, I'm glad to hear it, man. Glad to hear it. I don't know what a Herman Munster chair is, but if it helps you, you get a Frankenstein chair. I hope it helps you. See, there we go. Just going to take that low there now. And go on, just pop through. What's the low on that candle? 508. There we go. That's taking it now. So we saw the change right there. Right there. Hit the low. Scooby-Doo. Get out of our trade. It's a couple of grand. That's all right. I had one of these ergonomic chairs. It's like a $1,500 chair, but I tell you, it's not the best chair. It's not the best chair because it starts cutting off the circulation in your legs, and then your legs start to hurt. But I hope your Herman Munster chair works way better. You can get your feet up a bit more, take some pressure off your lower back. That'd be nice. Yeah, it's an ergo chair company. Oh, okay. Yeah, I don't know what make this one is, but it's got the handles that move up and down the back, the lumbar support and all that stuff. They need one of those ones that you can put your feet up on a little catcher in front of your chair as well. I think that would be a skookum as well. But I'm glad your surgery went well. I'm glad your healing is going well, Peter. Man, we wish you all nothing but a speedy recovery, my friend. So we've took this low as well, but we have not cleared the low, and we're still, yeah. We're using this mean threshold right now as support. I like that. Look for this to keep coming lower. Kind of looking for, you're welcome, buddy. It's good to have you around. I'm glad you're still with us. We did lose my buddy Abs. He had to go back to work, and he had a lot of medical bills he had to pay as well. So he had to get back to work, and the trading wasn't panning out that well for him. But he said he'll pop in and see us every once in a while, so it'd be good to see him. I hope he does pop in and see us. It was a pleasure to meet him down in Albuquerque. And if anybody gets an opportunity to go down there to Albuquerque and meet up with Abs, is a great guy. Great guy. You wouldn't regret meeting him, that's for sure. All right, so we've got a swing here. We've got a little tiny imbalance. And if we can get above here, then I'm back inside this small range here as a potential for that to keep going higher. And I'm still looking for that 25,630-ish area. But, you know, 930, we could still come back, revisit deeper into this range, down into here, or this old high back here. So just kind of keep that in mind right now. We're eating through this mean threshold. We're coming back and retesting this SIBI. I'll make sure I put these on here so you guys can see them. You kind of want to mark these out. Actually, this goes all the way up here. This is Michael's, what did he call this thing? When it's covered with imbalances on both sides. I can't remember what he calls it. Welcome to 60. When you got these little imbalances on either side, we include them all, but he's got a special name for it. I can't remember what it was, but Ola 3561. Hope you're good. I hope you're talking to Peter. I hope he's good. Okay, we're back into here. Now I'd like to see this roll over here and keep coming lower now. This is good. Good. Come back, retest this. All looking good for another run down into this deeper part here. So if you pull your fib tool on this, and Harry, if you're watching, there's your Fibonacci. We talked about the Fibonacci equation, the Fibonacci levels. There's 50%. So if you're going short here, remember I got out of the trade there. So if you go short there, hit 50%, you take half your trade off here, move your stop loss to break even plus the cost of the trade, and then you just let this continue to run down. So you're at zero stress on this trade. We're looking for a 62%. Take a portion of your trade off, take another 10% off. You get down to 70%, and that happens to line up with that old high we talked about here. So if you want to see this go higher, we want to see this get broken to the upside, and this breaker right here, these two up close candles, we want to see those get broken to the upside. Use the support to start running back into this premium box, and there's another little premium above here. We want to see that get broken at 225,519 on the upside to continue pushing higher. So this is a bull trap. So watch, this has to get broken to the upside. Otherwise, if you got the belief that, oh, we've got a swing low, you get a retest here. When you get a bull trap that close, wait for the trap to get sprung or reject you. And that's come all the way back up inside here, filled that whole imbalance right there, that SIBI, and now we want to see it rip all the way through here and start pushing lower. Suspension block. Thank you, suspension block. Oh, I'm good. Believe me, Ola, I am very good. I had such an awesome time. I tell you, there's so many times we risked blowing my back out. Holy crap. Some crazy decision. I got hurt 3 times while I was over there, 3-4 times. I was trying to play British Bulldog with the kids. I literally tried to run 2 steps, had flip-flops on, fell, smashed my face into the ground. I had road rash everywhere. It was terrible. So that was me out of commission for a while. It's terrible. I literally ran 2 steps and then it's like smack down. I went like an old man. And these little 8-year-old kids are like, oh, you're no fun. Yeah, thanks. Hans, morning. Thank you, thank you, thank you, Hans. And then I slipped on some tile, some wet tile, hammered down on my hip and my arm. And then I got bit by this venomous spider. Oh my God, does that ever hurt? Obviously not a lethal one, but wow. You get bit by a spider and it felt like someone sticking a needle into my leg, and then the cramping started, and then the pain would go, then it would come back about an hour later and do all this cramping in the muscle. It was terrible. So I'm looking up all these different spider bites thinking, man, I hope there's not like one of them banana spiders that's like got neurotoxin in it or something like that. Yeah, so I got a thorough bit of abuse while I was away. Thank God for ibuprofen and pain meds. But I wouldn't change a thing, man. It was great fun. Good times. So watch this breaker here get taken to the upside. Now see how we've traded through the mean threshold of that? Now we've traded above it. Now you want to see it open on it, which it just did there. See how it gapped down a little bit? Tap it. Now I want to see that. You don't want to see it get through the mean threshold of this. And it's through it. Maybe use both of them. We're into the mean threshold of this BISI, old high. Okay, now keep pushing. Look for this imbalance or this SIBI and this suspension block. See if the suspension block holds, and we want to see it get broken through. Take this last BISI on the upside. Use this as support. You can come back into that and then push for these equal highs and run for that 25,630 level. We're still waiting on 930, so we could see another revisit down here still. So we're just going sideways. And we're already back through that mean threshold already. So roll over, come back inside this range. We're inside this little consolidation right now. So we're inside this small little range. If it closes below here, then we're looking for a retest from here to here inside that small range. And we're just kind of waiting for it to break out of here. You don't want to be trying to trade this. Just kind of sit back and relax. It just seems strange, you know. I come back and there's snow everywhere. It's like 48 hours ago, I was sitting in the sun next to the beach or next to the pool at the hotel going, ugh, gotta go back to all that snow. Just enjoy it. There's birds chirping. Strange exotic birds. It was kind of fun. Really nice. See how we've come through it? Come back into it. You want to see this roll over here now and start reaching down into this area here. You can kind of block them out. And we'll see where you expect price to. It's obviously another suspension block right here. So watch here. There's the retest. Push through now. There's the first top right there. And we're digging in. So you can still see, even in these small little ranges, you can still see that activity, right? So we've got a high taken. We have a change in direction. Body trades below it. We trade back into it for a retest, and then we look for a run into the discount box. This is my classic box-to-box trading. So from here to here, you're in. Now you want to see it close below it, which it hasn't done quite yet. It is down here now. I want to see it retest this and start pushing lower now. They're all right in one candle. See that? Trade right there, closed below here, then quickly came back up. Hit it, we'll get literally gapped up, came through, took out the low. So that's range extension. That's the range extension model. Now if we trade back through here, now that we've taken this low, look for a trade back into here, and then a run back up to the premium box through that, and then look for range extension again, if we get out of this consolidation. Oh yeah, I had a crazy adventure. It was fun. almost got stung by this lionfish. We're doing some scuba diving, and we're just coming out of this wreck, and my buddy turned and he points, and I was just coming out of the wreck, and I look back over my shoulder, and there was this scorpion fish, like lionfish, sitting right here, and I turned and just hammered my nail into my knee into the boat, trying to get away from this thing. Like, you don't want to get stung by one of them things, let me tell you. They are painful. So yeah, I got beat up pretty good. So here, that's a nice little retest, range extension, nice. Now I want to see this just get retest of this last little down close candle here. See if we can't run through there. We just got some wicks extending here. And you can draw these out, just play inside the range. You're not actually trading it, but this is a great place to just kind of watch how price is moving back and forth between these areas. Premium, discount right here. So there's your premium, there's your discount. So let me just get you inside the range here. Look at that, all in one candle. Open, tap the discount box. Now we're running through this level. Nice. Now this, if we close above here, this candle becomes important for me. Old high, tap that, keep running, or come back, tap this right here, or mean threshold. That's all I want to see. And then continue running for this premium area here and here. The cold gets hard all the time. We hit negative 10.5 foot of snow. Week 4 was 70. Yeah, I was looking at my cameras, and the lady who looks after our house, poorly, she's like, "Oh, I'm gonna shovel your sidewalk." I'm like, "Oh no," because we got a wrap around sidewalk. It's terrible. Poor lady's out there shoveling away. Got her own kids. Got to deal with the kids and shoveling, and man, oh man. All right, so we ran above this high, turned around, and now we've got this BISI. The moment you have a high taken, you look for this BISI, and you think if it closes below that BISI, comes back into it. Now we're back inside this range. If it runs straight through to the discount, you can't get in on that. It's just a straight run. So if you lose the mean threshold of that candle, which it does right here, you just go, we're going for a deeper run here. Now, whether or not we close through that and then start running for these equal lows again, we're about to have a look right here. So watch right there. See how this is just stopping right on there? Just watch 3 seconds, 2 seconds, 1. It's like, nope. Run right back up into premium box one more time. Now it's running through. Welcome to consolidation, hey? Crazy. You can almost take this one right here. Like just this, from that wick to this wick. And see how we work the bottom, the middle, and the high of it. And then finally continue going lower. But we're going to take the whole block there. So here's, we've got to see it close below here, not just a wick. The body has to get below that. See how the bodies are frozen right on it? You want to see a body get below that before you start targeting your next targets down here and here. There's a retest of this. It's great. So now we want to see, this is range extension. This is what you wanted to see with this candle's wick. Come back into here and then extend the range. But we've got range extension already, but we don't have a body through here yet. So we have another SIBI with a imbalance. We've traded above it. If you trade back into it and tack it and start marching higher, look for this range that we're in here. There's your premium. There's your discount. and we're back through it. So we're looking for a range continuation down here now. So now what I want to see is I want to see a body close below here, come back, use this candle or this candle as support to continue pushing lower. Yeah, I'd like to see a nice little run back into here, maybe even take out this 850 candle one more time, and then start to run back up for these equal highs after that. So around 930, Hadi, agreed. I'd like to see a nice little run down, take out these lows, and then start pushing. Because if you look at your 5-minute chart, look at what we got sitting right here on 5 minutes. Other than this one here, if we can get through here, look for this one because it hasn't even been tested really yet. See that? It has not even been tested. So I'd like to see us run all the way back into this level, catch this, take out these 830s here, find some support off the consequent encroachment of that, maybe 247, 5, 25, 474, so 475, somewhere around there, and then start to run back through this level here. So you're looking for here to here. So you want to see this trade up, hit this, run back through, take this out, then find some support, take that out, and then start running higher. And that would put us in right in the middle of that sucker right there. If we look at this on the hourly level, see how that hourly candle, we've now closed above it. Its consequent encroachment happens to be right there. So where does that line up with our little guy, 5-minute guy right down here? That nice little retest right here. Beautiful. Test twice, keep coming. That's touching that old high we were looking for, right? Oh, we're just shy of it now. Look for a test of this. We've got a little price imbalance or volume imbalance right here. Price imbalance, actually. More delivery on one side than the other. There we go. Finally hit it. Now look for this down here. Yes. Come on, run. Yes, there we go. Now we're looking for a run into this level here. That low has been taken now. Tell you, the people in Thailand are such wonderful people. They're so friendly, and you know, the traffic is absolutely insane there. It's insane. And yet nobody's honking. You don't hear people honking at anybody. And there's millions of bloody motorcyclists. They're weaving in and out of traffic. They're cutting people. They're, you know, literally cutting in front of your car and then cutting in between your, they have their own lane. They drive in, they drive their own speed. It's insane. And yet nobody honks at anybody. There's the lows taken. That's awesome. Now we're running back into this level, right into the consequent encroachment we're looking for, that 475. Now let's see what kind of reaction we get there. We've swept these lows now, and it's 930. Delish. Now we can come all the way down and tag the bottom of that at 468. So as you can see, there's nothing really setting up in here other than this imbalance right here and this imbalance right here, and then this breaker. So you want to see it take out that breaker and then start marching for these equal highs above you. Unless you're going on a 15-second chart. Well, that is a 15-second chart. Sorry. guess I should put it back to a minute chart so you guys don't get all freaked out. So there's that nice little bounce off the 5 minute we're looking for. Now you want to see a continuation to the upside. That is, oh, look at that. Perfect. You guys, look at that on a 1 minute chart. Look at that. Right from there. Look at it right off at tap. Nice. Well, let me get rid of all this stuff here. Let's just put this one in. Did you get in on that, Hadi? How delish. Looking for this premium. So you got premium 1, 2, and 3 here. Good for you, Hadi. Good for you, buddy. There you go. There's the premium taken. Nice. There's your rejection block. And the highs. Right into the level. Delish. Pay yourself. Good for you, buddy. Nice run to the highs. Excellent. This is a retest this level. You've closed above here now. You don't want to see it close back below here. If it does, then you're back inside this range here. And we're still sitting at 930, so 933-ish. Right to the bottom of that. I want to see it go straight up from here now. Straight up, straight up. To look for 630. Old next high is 546. And that's right, literally right at the bottom of our high taken here, right at the bottom of that, these two candles. And there you go. It's a good first day back, man. This one broke above, come back into this candle here, this little breaker. Nice retest, push higher, look for this 545. Just take that right there, bingo, 545, done and dusted. There you have it, my friends. We called both directions, called the reversal, look for our objective. Hadi took the entry here, good for you. Hit your first payday up here, second payday here, and I'm looking for my 632 or 630. And, oh, look at that. Are you enjoying this nice little rush? Welcome back. First day. Bring it home. Bring it home. Let's put the box in here. 630 is the box. Dirt, 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 dirt. Oh, we get a nice little pop down into here. And then another continuation to the upside before taking that. If not, well, I want to see a reaction off of this level. And I haven't really put it in here as the perfect box. So let me just get this one lined up here. So we got it. So you know what it is I'm looking for. Right there. And we are in it. In it to win it. Look at that. There's 600. Right in the premium box we're looking for. Oh, this is not, it should be right here. Sorry. Right there. That's the one we want to see hit. Right there. Ding. Now, a nice little reaction off of that would be nice. Let's just get down into right there. And let's put this one right at the top of that right there. That's the box. So you can see on a 1 minute chart, our little box down here, tag off it nicely, perfectly off the 5 minute box, right in the consequent encroachment of it. Hit the box 600, all the way up to 630 is what I'm looking for. Anywhere inside that box, the premium box I called for this earlier. So that's where you pay yourself 1, 2, 3, scale yourself out. Well, there you go. That's it. You could be done for the day. Got my 2 big trades in this morning. You could add, if you took these trades I gave you here as well, then you are pretty much done for the day. Have a nice day. Move to the sidelines, and I'll see you tomorrow. That's what a little bit of R&R will do, eh? Calm the brain. I didn't have any sleep yet. I tried to go to bed. We got in at 2:30 in the morning this morning. So we literally got here 5 hours ago. 5 hours ago. And I tried to go to sleep, couldn't do it. So now I'm up with you guys because it's really 7 o'clock in the evening over there in Thailand. So I'm up, I'm ready to go. We'll be going for a walk on the beach right about now. Our friends out there in Koh Lanta, get up in the morning, you swim or go for a little walk on the beach, 5K walk on the beach, beautiful. And it rained all the time. I loved it. And then we came back and we went to a coffee shop, played a new dice game with some friends. And then we went back to the house, swam in this pool, and it's raining. The water's just raining down on the pool. You're looking out over this valley. You got all the clouds forming up in the trees. Unbelievable. And then this call to prayer comes down the valley and it's echoing through the valley. And the water's just getting bounced on by the rain. And it was just a haunting sound. It was so amazing to hear it. Yeah, it was, anyway, so relaxing. So relaxing. Just what somebody with PTSD needs. Just a nice, chill opportunity to just calm your mind. It was amazing. The next target right there, Hadi, is 622. You want to get the consequent encroachment first, because this is a classic place for it to turn around. Always remember this one, Hadi, that consequent encroachment of the premium array, that is often just hit and then reverses right off of that. And you don't get the full fill till later. So if you get frustrated by not reaching your 646 that you're looking for, keep your eye on this target here first, then that one. That's why you have those 3 scale out points. So you scale out 1, 2, and then 3. But watch this one. A lot of the times you'll see this premium run all the way up, especially if we haven't retested that last up close candle. In this case we have, so it would be great to see it run all the way through there. But if it doesn't, it comes back and retests this old high, look for this consequent encroachment here to hold. You go back through your charts, you'll see that many times. It'll run straight to the premium, right into the consequent encroachment, and then biff, right back out, and then come back and retest this. Especially if you've seen it just aggressively run higher, it tends to want to come back and revisit these lower levels. If it hasn't tagged them on the way, like this one here, it tagged it and then left, which is great. But sometimes you see this just bold candle shooting straight up and it hasn't retested this. Look for this area from here to get hit, reverse, and come back down, and then retest that area. Because look at this, it's just all straight up closed candles, right? Pull your fib tool on that run. From here, there's 50%. Look at that, right on the opening of the first presentation fair value gap, right? There's 50%. Now if we take it right to the consequent encroachment, just over 50% puts us here. 62% puts us as a full fill almost of this regular trading hour back. So just kind of keep that in mind as you're watching this now. We're looking for that 50% level, which is a retest of the first presentation fair value gap. Thank you very much, your inner melody. I appreciate it. Good to see you. I don't know if we've met before, have we? Your inner melody. Yeah, forgive me. I'm 60 now, so my brain doesn't, I don't remember things as much as I used to. So watch this. If we do get a pullback, this 50% range, just pulling into that discount area for another run higher. We met at your last stream before you left. Ah, that's why I don't remember you that well. And I was glad I found you. Ah, yes, I remember you now. Well, welcome back. We're back. We got lots of fun. Unfortunately, you're coming back to a time where ICT recommends you kind of stay out of the market now, because when you get into the Christmas time, the markets can go all kind of strange and weird on you and just bounce around and not give you a lot of consistency. So you got to be really careful about your leverage and be really careful about your ranges. We've been able to call it with some pretty laser precision this morning, which is great for the first day back. Makes us look really good. But yeah, so be careful this time of year. All the route through till second week of January or even the first week of February. Just kind of stay out of the market, watch it, study it. It's a good opportunity not to blow your Christmas cash on frivolous entries. So great opportunity to study. A lot of people want to just keep making money. They don't want to actually study the charts. Just study it, man. There's plenty of opportunities coming up. We're here in January. We're going to rip it through for you. We're going to help you out. We're going to help you get to your objectives. The 4 models, yes, the 4 model mention. The 4 models and the rules for the models. Those 4 models, it's all I need. It's all I need. And then you got to focus on discipline. Then you got to focus on the Hadi principle. It's discipline. The man is disciplined. He knows what he's looking for. He waits for what he's looking for. And he settles for nothing but his entry. So, melody, that's your thing. You're going to learn more about yourself than you are about the trades, the setups. They'll appear, and you'll start to get better and better at finding them and seeing them clear. And but once you figure that out, the next thing you have to deal with, the hardest thing you'll ever have to deal with, is what's between your ears and greed. I tell you, it's a beast. It'll take over your mind. It'll take over your trading. It'll make you risk too much. It'll make you risk nothing and watch it just run away on you, and you just curse yourself for not taking it, and all that inner talk. You learn tons about that. That's where you're really gonna, hopefully you're gonna learn here to get to that theta wave mindset. That's the whole purpose of the name of the channel's ThetaWaveTrader, is trying to get into a mindset where you're trading ones and zeros, man. Zero emotion. You're just focusing on the trade, the setup, the rules. You must follow the rules. And if you don't have them written out, memorized, and you're clear what they are, you'll make a mistake. You'll blame the setup instead of yourself and not looking at the setup clean. You have a fail-safe, you have the rules, you have the 4 models, you should do well. They do. They reflect the inner angst of most of us. And you'll find that some of the best traders are the ones that really know how to manage their self-talk, manage their discipline, manage priorities, and rules. And when you're not, and knowing your inner, that's what we call internal intelligence, your intelligence, if you understand how you think and you understand that my mind's not on this, and you don't have the discipline to go click, close your charts and walk away and go and relax and find a new way to get refocused, you are going to be forever chasing the dragon, trying to get the high, trying to get the rush, and never having it. And it's a gambler's mentality. And if you don't recognize that you have that, or you're developing it, you'll blow many accounts. You'll say it doesn't work. You can't get consistency. And really, it's not about the setup. It's about yourself. The consistency is found in the trader, not the setup. The setup is, you'll learn them. They're pretty easy to see. Consistency is all in here, and how to manage that. It really is. Darren, look at the 4-hour chart, says Adi. Stop babbling, he says, and let's get on to the 4-hour chart. Adi, what are you looking at, buddy? Areas to be careful with. All right, here. A really, really tiny little area right here. And right here. Another tiny area. All right. And another tiny area. Oh, actually, we can include this one in there. Okay, these are some areas to look for. Right there. Those are my next upside kind of. Oh no, you have to include this too. Let's see how those do. You are welcome, my friend. You are welcome. And you can join the Telegram channel too, because there's a lot of great guys in there and gals. Sandra, she's one of our hot ladies. She's got in there. She's really hot with trading. Who else have we got there that are ladies? We've had a few ladies in there that have come and gone, but Sandra sticks around. She's pretty hip, pretty with it, and got lots of guys in there that are willing to share stuff with you. So Melody, you are welcome, welcome, welcome. You come in with the right attitude. You come in with people caring and sharing. Then you get to meet some great people that are willing to share their knowledge and skills with you and teach you what they know and help you out. And everybody wants you to succeed, so nobody's pissed off if you're making a win. They all want to see you succeed, right? And they're posting their trades on there, so you're welcome to join us there on the Telegram channel when we're not live on the show here. You're welcome to join us on that. You just see the link in the description above and the bio description there. You can just kind of click on that link and we're happy to have you. Yeah, it's a lot of messages. Yeah, I think I don't think since we started that, I think it was like over 30,000 messages. But you get these guys that are like, I'm in, I'm short, I'm risk free. Okay, I'm scaling out a portion here. So they're doing them live. Their trades are live with you. So when they go into a trade, you get to see it live and you get to see the excitement of their trades and what they're picking for. They'll set it up beforehand. You get to see all that. So they're just texting like crazy. And don't be afraid to ask them. So if you're new to the game and you're like, I don't quite understand it, ask. These guys they'll help you out. They'll direct you to a video. And here's a great thing to use if you haven't already figured this out. It's called ICTindex.io. ICTindex.io. It's an AI model that takes everything that ICT's taught, and it's available at your fingertips. You type in a question, it will search through everything he's put out there on YouTube, and then finds the physical reference, the video, so it shows you the video, gives you the text reference as well, and answers the question. And that's the best thing. Go straight to the horse. Don't worry about all of us, because we all have our own opinions about stuff. Go to the horse. Go straight to him. Amazing, amazing. So ICTindex.io. Screen capture it, save it, put it in your favorites. It is the best thing. It's like talking directly to ICT himself. So if you ever have any questions or you're not quite sure about something, go straight to the horse. That's the best way to do it. It's amazing. And if you're new to our channel, by all means subscribe. We're happy to have you. We're here. Nobody's trash talking anybody here. We haven't had a real trash talker in here for a while, so when they come, we get rid of them right away. People that want to learn, you have an opportunity to learn with some great people in here, some really great people. So, yeah, don't blow the opportunity. But you'll get some people that just want to come here and say, you put the trade on, I want to copy it. I don't want to do the work. And it's a shame because you get to learn some really cool stuff. Teach yourself, teach your kids. This is generational wealth if you take the time to learn it. And if you're young and you're learning this now and you teach your kids this, generational wealth. Your kids don't have to be logging jobs 9 to 5 looking for work. Watch that level right there. See it right here? There's also a little tiny imbalance there, so watch that. Give that one some slack. We're bouncing off of this higher time frame level and this mean threshold, and we'll see if this holds. This holds. So we got overlapping little arrays, and we've got a low taken. We've got this right here, and we're kind of watching right in this box to see if this holds, or we get if it closes above it. So you got 26 seconds to watch what happens here in this little box. If you like our show, you like what we're doing, hit the thumbs up button. It helps us out. We lost some subscribers along the way. We used to be at 126, and we lost some people. They didn't like the fact, I guess, I was gone for a while. But anyway, if you're new, subscribe. Hadi's in risk-free and along. I wouldn't take it along just yet. But I see where you're going here, Hadi. Now you could tag it and go long right there. See how we've traded above it? Tagging back into it. You could do it long from here. Stop loss, got to make sure you're just below here. You don't want to see that level get taken. So that's, I'll go along with you, Hadi. How's that? It's too consolidated, really. I'd like to see it break this high here first before going higher. And the stop loss will go just below here because I don't want to see it close below that. As soon as we hit that high there, we'll take one off. So you want to see it leave with some intention here now, right? If we can get up above this candle and use this as support, I want to see that candle right there. Its mean threshold, no more than its mean threshold, get close below. So right there, you can take one off there. Take the high out. Risk-free. Pay yourself there. There's that consequent encroachment I told you about. See how it hit it? Bang, right on it. Now you got to be careful because now we're into, oops, we got to get ourselves into risk-free profit. Now I want to see if this holds because we're above here. So you're always looking for these because if they trade below them, then we're coming back in from premium to discount, right? And we've got the discount hit nicely. Now I want to see if aim for our first 646. After this is taken, look for the close of this at 646. And then that little 4-hour objective. Don't go out yet, Hadi. We're just starting to have fun, buddy. I'm going to sit just below that spot there. So we pay ourselves once, twice. I'm going to pay myself there. Bingo. Now we only got one left on there. Letting the rest of it run now. Your stop loss was too tight. There, that's just hit that 4 hour. Now we could bounce off of that. We've already paid ourselves 2. So if it comes back and takes me out. Okay, Sarah, right? Sarah. But that's a nice little, see how we got that reversal? And Harry, if you're watching, that's the reversal I was trying to show you before your computer died. Low taken. There's the change in direction. And Hadi was saying, oh, I'm sure, or I'm long on this, right? I'm long on this. So as soon as it gets up above there and closes and then come back in and retests it right there, now you can go long for a run up there. But that's the confirmation candle right there. After we've taken that, we've closed above it. You want to see it come back, retest it, take the high, pay yourself at the high or the rejection block, pay yourself at the consequent encroachment. That's 1-to-1. Pay yourself there or leave a piece on. So we've got zero stress, and we'll see if this continues to run higher. Now, I want to see this do one of those institutional order flow entry drills. Boop, just tap below it, and then see it run higher, and leave this portion open. Oh, it hit 646. Indeed, it did, my friend. Indeed, it did. Right there on that 4 hour. Little tiny guy right there. Rink. Bingo. There's the institutional order flow entry drill. Let's see if this keeps marching higher now. My next objective is going to be 648 if I've marked off the 4 hour correctly. Let me just make sure I've got the 4 hour marked correctly. Right there. So the next one for me, Hadi, is 650 and 653. 650, 653. I guess the first one's going to be here at 648. So we've hit the top of this hourly one. I'm looking for this objective on the 4 hour and see if it hits the consequent encroachment and then rolls over and comes back down again. I've only got one left on now, so we've come back inside here. We leave a little piece open. So remember, we talk about the graded response. When you hear me talk about graded response, this is our D level entry right here, or a C level entry. We left a small little portion open. So now my stop loss goes here. I don't want to see it get any lower than that. I want to see it just continue to push higher now. I want to see that last little piece stay open. That's a C level trade. A D level would be a full fill right back to the consequent encroachment, and your stop loss is just underneath that. If it trades through that on the close, then we're looking for a run back into this discount or this old high here. At least that's what I'm thinking anyway. Otherwise, this I want to see just keep pushing higher now. I want to see that. See how we validated these two order blocks here. I want to see that act like our propulsion now. I want to see it close above it and then use its wick to the body as a propulsion to push this price higher. I don't like wicks. I like bodies to get above these highs here. But it is active now. It's consequent encroachment. There's a small little imbalance right here. You see that? Stretch it out. You'll see it sitting right there. Let's see if we can't push that a little higher now. We're risk-free. This way to get with your trades, right? You want to try and get to the point where you're risk-free and zero stress, right? Just kind of watch it now. Now all it is just managing your now see how it's already trading through there? Don't like that. So now the last ditch effort I've got is I don't want to see this consequent encroachment get taken. I'll close the trade off if it does that. Russell, how's it going, buddy? So this on a 5 minute, I want to see an institutional order flow entry drill. I want to see that close right there. And then you can see it come down, just tap it or just come below it, but not actually take out my candle here. I don't want to see this thing fill in. So you want to see a 5 minute institutional order flow entry drill for a continuation and leave this open. Once you get that little spike above, you want to see that gap stay open. So this would be the graded response on a 5 minute chart right now. On a 1 minute chart, we've got our graded response. It's a C-level response. That's the 75% fill of the BISI that Michael's talked about many times. Thank you, Russell. Thank you, sir. It's good to be back. I've been looking forward to hanging out with you guys. When I was down there, I was going to do a show, but I thought, no, you know what? I'm just going to kind of chill. I wanted a log one show so I could say, look, I did a show over in Thailand, but I was just enjoying the relaxation. Man, did I ever need that. It really is nice to kind of clear your head. And with the wedding and everything, it was like crazy busy. And we were up north in Chiang Mai, way up in the northern part of Thailand. And we went all the way down to Phuket, and we went to a resort, and 12 of us, out of 12 people, 10 got sick. 10. So it was just myself and one of the aunts were the only two that did not get sick. Everybody else puking their guts out or had their trots. The resort we were at, oh man, everybody. When we went down to the sit by the front desk there was people that had just come back from the hospital. They'd had Bali belly, they call it, white man's belly. They all got sick. So many people were just dropping like flies in this resort. We're like, man, your food. Meanwhile, my iron guts were like, yeah, that was good. I like the food. But yeah, everybody got sick. Like 10 out of 12 of us got sick. Yeah, it was the toughest part because it was so hot. Yeah, see how it's ripping through here now? I don't want to see it come back into this candle. Now that we validated this above, I don't want to see this mean threshold get taken here. So watch the body here. There's a little tiny imbalance. I don't want to see a body get through here because we could get one more spike down in through this and take it out. See how there's the institutional order flow entry drill right there on the 5 minute? That's what I want to see now. Go, go, go. Leave. I don't even want to see it come back into, otherwise it's going to come back to this consequent encroachment. It took me out there. See that? There's the consequent encroachment right there, which is that back to this one here. Now watch it leave. You want to see it just go from here. 50% of this BISI was probably right about there. At 616. Let's see what kind of reaction. So this is your graded response on a 5 minute chart. Tab and O high. That's it. You want to see it stop there. Otherwise it's D level if it fills. 605. It's done. Now you got to say to yourself, is this a turn point? We've just come up into that 4 hour window. We've hit the 4 hour and now we've reversed off of that, you see? And now we're getting a significant pullback. So if we close below here at 604, Then I'm looking for this to be a reverse, and then I want to see a change in a market structure shift. So once that's been taken, I've got nothing down here to bounce off of except this order block. So you take all three of those, add them together, find the body, and take the mean threshold of that. You don't want to see that get closed through. So now we see how we've traded below. Oh, there's still no body below here yet. See that right there? On a 1 minute chart, there's your premium. We've not had a body break below it yet. They're just literally closing on it. So we had a bit of wick doing some damage. Pull your fib tool from here. Harry, if you're watching this, pull your fib tool from low to high. There's 50%, just dipped into the discount range. Run back up. We clear this little imbalance here and here. Look for a continuation on the upside. Well, I don't think it was the water, even though we drank bottled water all the time. But because it was so hot, it's hard for the restaurant to try and maintain food that has to sit out in a buffet for hours to try and keep it, cool enough that it doesn't start to go off on you, right? So in all fairness to them, it is a hell of a challenge. But we drank bottled water all the time. And they got signs on the mirrors saying, do not drink the water. You can shower in it, but don't drink it. Just drink the bottle. And they bring bottled water to your room all the time. So, but yeah, if you drank the water, you'd probably get sick. Montezuma's revenge. Yeah. There is a breaker right here. You just type in the wick of it. We just came into the consequent encroachment of that wick right here. But this is the little guy I'm looking at right here. If we come up, tap that, and then you want to see it react off there, because we went through it here, but we did not come back, retest it, and go lower. So it's been retested now, right here. That one's been retested right there. So now I want to see if it holds and comes lower. So I want to see that level there hold and bring our price back into this level here. And that's what's going on here right now. We've got a little change in direction. Body's traded below here. We've traded back up into the premium box right here. And now I want to see this start pushing lower. If it starts to get back through this one, you're back higher again. But right now I want to see if that holds right there. And yes, it is Russell inside the bigger breaker right there. It's just in the wick though, the 50% or consequent encroachment of that little wick. So there's the high right there. Let's see if we can get through that on a close, and then look at the mean threshold here. So we're looking for this. What else do we call this? Other than it being a breaker, what else do we call this? Anybody remember? What's the name? What do we call it? Not what Michael calls it. What do we call it? Michael calls it a breaker. We call it a breaker / bull trap. If you're sitting inside the breaker, you've gone from discount array to premium array inside this small range, and you have not closed above it. This bull trap has potential for this to roll over and come right back down again to this discount box. So we want to see price trade through this, come back, find some support at this, and then continue going higher. Because you don't want to get caught in here. And Dubik, obviously quite impressed, quite a little chuckle going on there. So just keep your eyes on that little guy there and this guy right here. This is the small range you're working in, from there to there. That's all we're in right now. And this is the kind of things you have to watch out for, Melody. Kind of watch these little ranges. See how you've gone from here. We've retraded all the way back up to the perfectly to that 79% retracement optimum trade entry reversal area. We hit it perfectly, and now we're bouncing off of it. So are we just coming back to 50%, just dipping into the discount portion of the range, which is this little discount box in here. And we're going to push right back through the mean threshold of this and start running for a rejection block, 50% of the wick high, and then keep pushing higher. So there's multiple different arrays inside this, even inside this small range here. You got to imagine if this was a hourly chart or even a daily chart, you're still looking for these really specific little data points and see what kind of reactions you get off of them. And do they get used? If you trade right through them, look at them as potential opportunities for that to come back to those levels to go higher. Thank you, Nan Dubik. It's good to be back, my friend. Thank you, thank you, thank you. Oh, let's look at some other stuff. Let's have a look at over here at the old ES. There's the consequent encroachment mean threshold of this last up close candle. We're hitting the mean threshold of it right there at 68.57. We've taken this high here, so that's the hourly chart. You get down into a 15-minute chart. Watch this level here. Now that high has been taken. Look for also a 1-minute, 5-minute chart to look for any BISI that's forming here. If you trade through it, look for another run back into this range. And if we start taking out these lows, look for a deeper run back into the levels that never got hit. That one, neither one of those got hit. This didn't get hit. Those are all levels you want to see it retrace back into because they never got touched. Look at this. Look at that. Talk about a model that we talk about every day. High taken, body closes above it. You come back inside it, and there's that BISI, the premium. You come back, tag it, and then push higher. Running up into this range here. Pull your fib tool on it, 62, 70%. Scale yourself out. You see it trade through this on the downside. Look inside the range you're in. Just that small little range right here, from here to here. Right there. When you trade back in, where does it trade back to? 50%, 62%, optimum trade entry reversal. Go back higher, trades back through that level. Right there on a close, you come back, tap, tap, tap multiple times, then runs the high. It happens over and over again, my friends. The setups are there. So now you want to see this 15-minute chart. Hold, hold. Do not fail. Do not pass. It's got 9 minutes to leave that open. Then come back through it, fill it, and then start hunting inside this candle. Then look for the lows. Otherwise, still upside. Yep, I agree. Still more upside. Ollie, yes, I had a great time, buds. I had a really good time. Might come over and see you in April. I might pop into London and go have a beer with you. Go and see my cousins again. My wife's 60th birthday is in April, so I'm going to take her to Paris. I'm going to take her to Paris. And then pop back into England and see some fam. Maybe pop up to London, see my boy Ollie. Go to a pub, have a little beer. That's filled now. All right, let's have a look at some other stuff here. What else we got? Dow Jones. Dow Jones. Mr. Jones, Mr. Jones. This is where we're looking, my friends. We are looking for the premium. We are looking for the premium right here to there. Look for this level there. Change in direction. Trade back into it. Look for this discount box down in here on a 1 minute chart. You're trading inside this range here right now. You want to see that hold. Perfect entry would be right there at 47,558. You want to see it tap that, roll over and start coming lower and start targeting 47,515 to 500. If it even so much as trades above it, stop loss will be sitting just above there. So keep your stop loss tight, because that's what you don't want to see. This get traded through, find support at it and go higher. See how they overlap? You got one that wants to go short and this one wants to go higher. So if it comes back and fills that one and this one reverses, look at this as support to go lower. That's an institutional order flow entry drill right there for a short. We're hunting for this area here. Anyway, not that you're looking for these big trades. Oh, this is November. We're into December. Let's change this up, shall we? Let's change this up. See, yeah. Oil futures, I think we're into January now, are we not? The January crude oil prices are here. Tuesday. CL. Where's my buddy Craig? I haven't seen Craig in here. Our Disney man, an oil man. So, Melody, are you still with me? Are you still here? I just want to show you something. Yes, we'll get a nice real ale pub for sure. Yes, you're still here. Okay, good. Craig has been MIA. Oh, Craig. So, Melody, watch this. See how we got this swing low here? Always kind of look at this. So here's one of your reversal rules you want to kind of look for. As soon as you see a low get taken, whether it was this one over here, from let's say there was a previous low over here that was taken, like right there. No, they're pretty much the same. So they have not taken that old low. But this low here gets taken. We put our little tool here like this. Okay? And we say, I always got them at the first rule. So write this down. As soon as you see a swing low, you look for the first SIBI that occurs before the swing. Rule number one. Then what we're looking for is a trade Then you got to say, where is the very first bullish candle to the left of it? And if there's two together, you take two of them. If there's three, you take three. Okay? The last one is the most sensitive, but take all three of them. So rule number one, look for a low to get taken. Rule number two, is there a SIBI there? Good. Rule number three, where is the first bullish candle to the left of the SIBI? Find it, mark it. Okay, so that now becomes a breaker because those two up close candles make a swing, and they take, boom, they drop down and take that guy out. That makes a breaker. It's also our bull trap. If we're looking for a trade back up, you want to see it hold as a bull trap and roll through. If the bull trap fails, as in this case here, see how we trade right through that level right there? Let me move this so you don't have all these dots going everywhere. Let me lock it in so it should take away all those things there. Yeah, good. So you see that level right there? See how we traded through that on a close, but it also closes above here. So ideally you want to see it close above this, but doesn't take that. Comes back, taps it, and then you want to see it close above that, use that as support, then start targeting your next high. But in this particular case, we have our SIBI here. The body trades through it and through that candle I mentioned to the left. Watch this. Take the top of that candle right there and draw it across. Let me blow this up so you can see it all sexy like. See that right there? Body closes above that candle. Then what does this one do? It opens. As soon as it comes back and initiates that candle, it's close and no more than the mean threshold of that candle is ideally what you want to see. So it goes like this. It comes down, it gaps down, and then goes boop, tags it right off the close. See that? Look at that. Perfect. So 1, 2, 3. 3 different levels that you want to see hold price. Okay. Comes down, tags it. I'm not even interested in this one here. I just want to see the last one that it took is the one I'm targeting, not the one behind it. Okay. So it comes back, hits it nicely, and we catch our long. As soon as you get your rejection block, pay yourself. Move to break even. Okay. So we've hit our rejection block. You go to break even. Stop loss is just below here, and you've paid yourself. So now look at that. Now you use your fib tool inside this range to pay yourself at 50%, 62%, and then there's a little tiny sucker right here. I'll stretch it out so you can see this, because you'll get to see where all the rules and all the right there. Let me just pull this one out here. Just so you don't think I'm form fitting this. Right there. See that? I went from this, that's the premium box. So my box to box setup would be here. If you don't get this opportunity, we look for the candle to the left. There's your entry. So entry 1, we go start targeting. So whether you're using the rule for scaling out, and if you're new to the game, always use this method. Always use this method to start out with. That way you can get kind of comfortable with making some money and saving your ass at the same time. So there's our range. There's our box to box trade. So we catch this first breaker right here. You catch that and we're going long. 50%, pay yourself, move to break even. Or take out the high or rejection block, depending on what method you're using. I'm just going to show you the first method, which is the fib tool scale out model. So as soon as you get to 50%, you take half your trade off and you move your stop loss to break even plus the cost of the trade. So if we entered in right here, that's our entry. We get in right here, we're going long, pay yourself 50%, take half your trade off, you're into break even, and you're risk free. If you've got enough of a piece on, you can take a small portion off at 60%. This is our next level right here. It's our next bear trap or bull trap, right? So you got to mark that out right there. Look at that. Literally closes on it. Look at this candle's high here. It's 58.79. Look at this candle's close. 58.79. Then it literally opens, taps it, and then keeps going higher. So that breaks the bull trap, and we keep marching higher. We aim for our premium box right here. You hit it. Now you want to see it trade back into it and go higher, right? You don't want to see it get broken. So that's box to box trade, internal range liquidity hunting. Using the fib tool as our way to scale out of our trade at 60, 70% and leave a portion on to hunt for the old high or the premium box. Box to box trading is, this is method 1. Method 2 is box to box. Pay yourself, you're done. Okay. Range extension would be this wick here. Now that we broke this high or this premium box, model number 2 is range extension model. So what I want to see is this close, but not take out that high. Close above here. Then you come back and you see this wick come back, tag it, and then run the high out. That's range extension model or continuation model, right? Range extension. And then continuation is if a body trades above this, I want to see it, like is in this case, I want to see a candle, this one right here. This is that model, comes back, continuation model right there, tags it, and we go and take out the next high We're going to aim for this high up here now. We don't want to see any more than this premium box get traded through. Look at it. Comes right back, tags it, and then continues to go higher. It takes that high, either pay yourself there, and we're waiting for this to get taken out now. That's range. That's continuation model. So you got model 1, reversal, model 2, continuation, internal range liquidity hunt, continuation, extension, then continuation. So we're looking for this high to get taken out now. So there's 3 models right there. Got it? That's beautiful right there. And Hadi, did you grab that? Then reverse to the upside. Did you grab that? Out. Nice short. Oh, you got the short. Okay. Good. Good. I'm glad if you're picking up on it, Melody, that's what I like to hear. Ask questions if you're not sure. But the models, they're simple models, but I tell you, it's whether or not you're gonna get to the point where you'll see it so many times and then you'll say, I don't know, Darren, I don't trust it. And then it does it and you go, shit, I should have trusted it. You'll see it enough times before you trust it. And then once there you go, done. There's your range extension model. Done and dusted. Now that's you pay yourself there. Move your stop loss right up and underneath here. Because why? I don't want to see this get taken. And this is my propulsion area. I want to see that propel that higher. Because if it takes this out on the downside, then we've got also a market structure shift, and I'm hunting for this down here. So I want to see that keep pushing higher. So your stop loss there, you've paid yourself from here. You paid yourself all the way up. You get yourself another entry long here. You pay yourself up. You pay yourself there. Stop loss is sitting here. You're in another risk-free trade. And this is on every asset class, everything that produces candles. The same 4 models are winners and chicken dinners. I'll tell you. Is that my buddy Derek? Derek, my man. So hard to find this guy. Good to see you back, D. Thanks, man. The B Master D. Good to see you. Got 2 of 3, but I will watch later the recording again. Watch right here. So remember, I tell you, as soon as you see this high get taken, you got to follow this rule. As soon as you see a high taken, look for this reversal model. Because what we saw down here, this reversal model we saw here, we're looking for the same thing up here, right there, right? And if it trades all the way through it like it does right here, then we're looking for this to get taken out and leave that alone. We're looking for that guy's half the wick to continue pushing down to our next discount array down here. So watch very carefully now. So mark it out on your chart, Melody, right here, like that. Mark it out. That's that box right there. So I want to see if we close below that. Take out the mean threshold of this. Watch this right there. There's the mean threshold. Keep coming. Keep coming. Close below. And then where are we targeting? Remember, the body's got to break here. So now see how that was right there. Want to see that tap this and come lower. If it doesn't, then we just look for this candle here. Once it's taken this, if it closes below here, like we had here, see how it closed above that? That's what we're looking for here. Closes below that. Use this as support. Here, the wick, you don't want to see more than the body. It can come back because it now occupies the same place as this Bissy. You got to give the Bissy a little wiggle room. See, it already hunted straight for it. See how it dove straight down into it already? It's already got the discount. So you don't get it. You don't get in. You didn't get out. You don't get lost. you get to see it happen. It just runs straight to the discount. So that's your target already been hit. So we can't get in it, right? You've missed it because there's nothing to hit unless you were looking for a 50. Let's go down to a 15-second chart now and see if there was something there on a 15-second chart. Right there. See how that body, there's that market structure shift. Body closed below the market structure, literally opened back up on it, and then went down from there. So that's the entry on a 15-second chart right there. Right to the discount box right there. It hit it, closed below it, then continued to close below that one, then trade back into that one, just like it did here. Open there, right there, closed below it, came back inside it, and then range extension again. We got the run down into the discount boxes down here. So that's a 15-second chart. So now you've got premium, discount. Inside that range, you're into the discount portion, and you're inside this discount box now. So that's box to box, or this box. Now I'm expecting that box, if this one holds now, to see how that we talked before, Hadi, about that consequent encroachment. If it hits it there now and rejects off of that and goes all the way back up to an area that we didn't get a chance to get in on, look for a retest of that level. This should hold, and I want to see it retest that level. We didn't get this one either. So I'm looking for here, here, mean threshold, and this thing. Those 4 levels right in there. I want to see this hold and get us back to retest that first. One would be here, 59. And this is oil, right? We'll quickly watch this one and we'll see if, well, now we're retesting the low. I want to see this breaker get hit though. Not just the low. All right. We're going to come back to this one. So I don't want to see it come down below here before coming back up here. We'll come back to that one. Let's have a look at Bitcoin. What's Bitcoin up to? Oh, nasty. So, Melody, back to our rule again, right? Let's follow the rules, just like I just told you. But now we're going to do the same thing with Bitcoin, okay? And those of you who are new to this game, or you're not buying into our little theory, you just watch. You just watch, brother, sister. We have a low taken. We look for our first, for our rule, number 1 is, what is it? We look for our SIBI. Then we look for the first bullish candle to the left of this, right? You'd say it's this one, right? But because it's buried inside this, you have to take the bigger one, because this is buried inside the actual breaker, which is right here. Okay, so you have to take these, mark them out, put them on your chart, right up to there. This is our breaker. All right, then what we're looking for, and we'll call this the breaker, and we have it marked right here in our little delicious breaker templates. So we want to see a body trade above our first SIBI, right there. And you notice how we don't get a chance to get in on it? That's okay. We wait, and now we're inside this range, and we're saying we're above the 50%. So what you have to wait for is either for it to come back down into a discount, because you always have to do this, Melody. These are the rules you have to stick with. Do you want to pay for a premium and hope that you get a bigger premium for it, right? We don't know this is going to be a full reversal yet. We just know it's a change in direction. okay? And we're trading inside this range. Now there's the first opportunity right there, and it's above 50%. So you'd have to say, discipline says, no, I'm not touching this, right? Because I'm not paying for a premium to hope for a bigger premium. So what I'm going to do is I'm going to wait for something that's a little more solid. I'm going to wait for a market structure shift. I'm going to wait for this breaker to get taken out to the upside, or I'm waiting for the premium level here to get closed above. Okay. And the premium level is right here in terms of this range, this smaller range here. There's the premium box. There's the discount box. Well, there's a little tiny one down here, but you have to include all of them. So that's the discount box. It's below 50%. So you're looking in here. We're above that level. We want to come back in. So as you can see, we're into the premium. We come back to the 50%, just dip in below that, which is this one right here, is that institutional order flow entry, Jill. And then we went higher, right? So wait for this to get taken out to the upside. It gets traded through right there. And look at this. Next candle. Tag. Hits it there. Now I'm going to go long, and my stop loss will sit right there, just below the low of that, because I know if I lose 50% of that, it's coming back down to the area that we didn't get an opportunity to get on. That's the rule for me. It's an extra rule of, I watch very carefully here. If I lose the 50% of that last up close candle, then I think it's definitely going to run back down to the discount box that we didn't get a chance to get in on. So you'd have to have a deeper stop loss or get out and get back in again down here. Either way. So we close above it. Watch how many times we hit this candle, this breaker here, right? Look at that. Bang, 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 bang. All the times we've been nailing that breaker, right? We come back, we hit it multiple times. And then finally, it continues to go higher. And what is this? This is internal range liquidity. So you have a change in direction. We try to get in on that. You can't get that. Model 1. Internal range liquidity. We can't get at it. It's already been traded into. So we wait for the model, the next model, which is the range extension model. So we wait for this premium box to get traded through. It does. Now do we get a chance to come back and tag it? You don't even get that one. So we look for the continuation model. The continuation model is, do we have a body trade above the high here? Or this breaker? Yep. It trades above it right here. Or if you're waiting for the high to get taken, there's the high. It gets closed above. We trade back into it. Now I'm looking for the continuation model. And this is the continuation. Took a little while to get it, but that's the continuation model. So that's model number 3. You got that? So that's in Bitcoin. Okay. We've showed it to you in several different asset classes now. Okay. And then you're pulling your fib tool from high to low, and you're paying yourself 50, 62%. If you're using the first model, take profit model 1, I think I've got 5 take profit models now. Take profit model 1 is the safest one. It'll protect your assets. It'll protect your stop loss. And if you're early, or if you're new to the trading and you're really kind of a skittish trader and you don't want to lose your money, take profit model 1 is a great way to scale out your money. And you also get to find out a little bit about what you're like in terms of your trade model, your greed. Because once that trade model, you see how it just rips through it and keeps on going higher. Then you go, oh, the greed little monster says, hey, we could have made more money on that one. Right? You get to learn a little bit about yourself. Anyway, that's the take profit model. So you come up to here and you go, where's the first? For example, there to there. So that's the range. As soon as you hit 50%, so as soon as you scaled or you went in here, that was our entry. 50%, pay yourself. Take half your trade off, move your stop loss to break even. 62, pay yourself. 70, pay yourself. 75%, pay yourself. Pay yourself. 88%, pay yourself. If you got enough micros on the mark. If you took off 50, 60, 70, 80, 90, you're done right there. So what model now? You say, well, what if that continues? Well, then we wait for this continuation model. We say, as soon as it breaks this point, comes back and tags it, start your trades all over again, because now you're expecting to see that go higher. That's Bitcoin. So the models, I've got the models that they kind of overlap themselves. They dovetail as safety and to get yourself back in sync with the market if you just use the 4 models. And if you don't understand them, they'll come to you. You'll get them. Give them time. Oh, look at you, little Mr. Natural Gas. I've been waiting for this sucker to go up for a while now. I got lots of money in this one, so I'm waiting for this sucker to keep on climbing. Real estate, not so good. S&P, oh, mom and dad, you must be happy with that. Look at that, 31,000. Oh, diggity dang. Gas, good. Bitcoin, carry on climbing. Agency, thank you. Keep climbing. That's what I'm looking for. Market structure shift on a weekly. Get up there. Mining. I want to see this sucker run for these highs. And then I'm getting out of that one. It's a mining thing I got into a long time ago. Gold. Melody, we're in gold now. Are you with me? Are you still with me? Tell me you're still with me. Yep. Okay. So gold, see how old high was taken? We're going to do it from the sell side now. We got the buy side, right? Here's the buy side. See how we've changed. This is the setup. This is a setup, and we're showing you on multiple time frames, multiple asset classes. You get to see it. So lows taken, change in direction, body trades above it. We trade back into it. We go long. Stop loss will sit down here. Goes long. Premium box, box to box trading. That's the internal range. ThetaWaveTraders, box to box trade, done. Right? See that? We trade through it. Now you want to see this wick come down, tag it, and then look for range extension. And then we want to see continuation. So we want to see that one and that one get taken out. Watch this. We do get range extension, and I want to see continuation. So I want to see it come back, tag that level right in there, and then use it to go higher. Watch. See how we have those overlapping ones I was telling you about? That's the one you say, oh, it's traded below it. You got to be careful now, because now we've taken out a high and we're switching or trading below it. So you got to say, am I just trading back to this level? I want to see it now trade back through both of this. So this one wants it to go higher, and this one wants it to go lower. See how we traded through it? We come back inside it, and then we go higher. Range extension, extension. Come back inside this one. Trade through it, come back into it, run back into this range. From there to there, there's your premium, there's your discount, all the way down to discount, does not trade through it, trades right back up, range extension one more time. Love it. So then we have market structure shift, body trades through it, and what do we want to see? Come back, tag it right there. Look at that. And then range extension right there. Just did it. One tick, pay yourself. If greed kicks in and you were aiming for that, you go, it doesn't work. That was the range extension right there. That little tiny one tick pop below there. And then you're back inside this range again. It's a beautiful thing. You just got to keep watching it. Keep watching it. Same thing here. Trades below it. There's our level. We don't want to see it trade through that level. On a close, look at that. Wicks, look at that, just right on it. Rolls over and then goes, boom, takes it out. Then we look for our close above, same kind of situation. And we're going to say to ourselves, where am I inside this range? From high to low, I got to see it right there. It goes above, tap, tap. We're into there to there. There's 50%. So you got to get just below 50% to get your discount right there. Closed above. You're below 50%. Good. Gets to 50. Move yourself to break even. Pay yourself. And right there, there's the premium box up top. Hits it, runs through. You get another extension. Trades back through it. Comes back into it one more time. And now we start to run back inside that small range there. That's hunting, man. It's a beautiful thing. That's gold. Anyway, so we're still looking for further downside, and I'm looking for gold to reach for here. Looking for gold to reach for there. So we could see this run all the way back up inside this box and then come lower. Or I want to see it just come for a big charge down into this box here. That's the downside I'm looking for gold. What are we looking for here? Little piggies. There's little pigs. See how the low's taken there? Change in direction. We closed above it. We trade all the way back inside it. Run all the way back up. You want to see this bull trap here get taken to the upside. Start trading into the rest of this big gap here for pigs. Oh, literally up there. So this, I want to see this roll over. Soybeans, I want to see roll over and take these lows. Live cattle. Melody, are you watching? This is cattle now. This is a commodity market. I'm telling you, this shit works on everything. Market structure shift. Trade below it. Look at that box right there. I want to see us trade back into it. Look at that. Bing. And finally goes below it. Look for the reversal. See how the body does not trade above that level? It sits right on it and then rolls over and comes lower. That's the rule. If you think, oh, that's the level, as soon as it trades through that right there, I'm going to go long now. No, the rule is a body must break that level. It does not. It literally closes on it, then rolls over. And you go, if that closes below this level, I'm on the wrong side of this. And it does. It opens below that level, comes back, gives you one opportunity to get short right there, and then takes off for a beautiful rundown right there. That small little change opened down here, popped back up. That was your chance to get short. Because if you were going along and you were like, oh my man, I really don't want to see that get traded below. It does. I'm on the wrong side of it. Quick, get your trade back off and go short. You make your money back that you would have lost there. Anyway, that's live cattle. It happens on everything. Everything. Same thing here. See how we traded above that level? Come back, tag it right there. And off the races. That's perfection, man. Right there. And just hunt for the next high back here somewhere. These little cluster of highs. That gap. Wheat. Does it happen in wheat? Breaker. Trade below it right there. Trade back into it right there. Short. Discount box. Trade through that. Come back inside the discount box for continuation on the downside. Takes that out. Do that institutional order flow entry. Continue pushing lower. That's wheat. Wheat. Does it happen? Does it work in Forex, you say? I don't know. Melody, let's see. British pound. Let's look at the British pound. Can you use this in Forex? So we've got this high. It's taken out this high here. We look for this reversal. Trades below it. Like that. Look at that. Trades right back into it. And then ba-boom. Down we go. That's the reversal pattern. Done. Discount. Market structure shift. Right here. Watch for this level to get retested. Trades below it. Where does it get retested? Right there. Right there. Retested. Goes lower. Now we want to make sure we look at this level. Now that we've got these lows have all been taken out, I'm looking for this to close above, come back, find support at it right there and go higher. It took that high out. Pay yourself. That's the high, not this one. When you drop below it, that is the next high. So you trade back into it, pay yourself there, move to break even. If it comes back against you, that's the rule. In that tight little range, you're into a discount, pay yourself at the premium. If it comes back against you, you're in a small little consolidation. You want to see these highs get taken, but bull trap. Remember, first candle to the left of the SIBI, that one there, it has to get broken for you to continue going higher. For the range extension model, that must get broken. If it doesn't, it's a bull trap, and there's the bull trap. Comes back and takes you out. That's why you pay yourself at the previous high. Anyway, it happens. You can get it in Forex as well. Does it work in banks, you say? Is it possible? Could you possibly make money in banks doing this? Switch up, takes out the high. You close above it right there, tag it here, go higher. If you're quick to catch it, that's the high you want to tag off of. That was all the way back in August. If you want to wait till time of year, best time of year is April or March, April. There's the reversal in April. You want to see this high get taken out. It does right there. Comes back, tags it right there, and you would have caught yourself a nice little run into December. Anyway, our friends at Disney. I've been looking for Disney to come down for a while now. I want Disney to come down into here. I want to pick up a Disney deal. And this is what Craig, remember when Craig was like killing it in Disney? Look for this level down in here. Upper box, why didn't you take also the right bullish candle in before the first bearish candle? Oh, sorry, Melody. That was probably a bunch of charts ago. I just saw here. At the first gold long, meanwhile, you deleted the box. Sorry, let me have a look. Gold. Why didn't the upper box, why didn't you take also the right bullish candle in before the first bearish candle? Okay, I don't know where you're talking about. What chart are you on? 15-minute? Where are you talking about? At the first gold long, meanwhile you deleted the box. The first gold long. Like over here? What are we talking about here? Give me a time where I'm talking about, I was going through a bunch of stuff there. Yeah, you now still have the lower box inside. This one here. So I'm looking for this box right here. So it tagged that box. Isn't that what we were looking for just before I left? It came back, finally came down and hit it. So that was the short in gold. $42.65, $42.65, $42.65. This box here, that's a perfect little tag on that level. And then you wait for this to get traded through. It does. So you look for this level to get traded through. It does. You don't get any opportunity on this particular chart, but look right here. So when you see this, think about the time frame you're on and you say to yourself, I want to try and catch a trade right here. I'm going to put this as an area of interest. My templates, I call this the area of interest, right? So now what I'm looking for is anything that gives me an opportunity to get short here on the lower time frame. So let's go to a 5-minute chart and see if I can find anything in there. So this is my area of interest. So there's one right here. If I can find one that trades below that, they literally open and close right on each other there. Or this level right here, it trades through it, and you don't get a retest there. So let's go down to a 1-minute chart and see if we can find something in here. So we have a market structure shift right here. We drop below, and now here's one of the other rules that Michael talks about. When you get a market structure shift, look for the first fair value gap that forms below the market structure shift, and look for an institutional order flow entry drill from there to go lower. There's the first fair value gap that occurs below. Institutional order flow entry drill. Continuation. Perfect right there. So on the 15-minute, see how we couldn't catch that one right there? There's nothing there. You go down to a 1-minute. Bang. It's right there. So when you're looking on those higher time frames, you say, oh, I'm looking for any opportunity here now. You see it going down, you think, great. Obviously a 1-minute chart, come back into that. I'm looking for an entry right there. Your 1-minute chart, you're sitting here and you're going, oh, look at that fair value gap forming below that market structure shift. Give me an institutional order flow entry drill and I'm short. Because you notice you don't even get a retest of this. You do get the institutional order flow though, and down you go. So that's combining your higher time frames with your lower time frame entries. Sorry, and let me go back to this 15-minute one. And at around 42.80, you marked the upper box before 42.80. 42.80. There's a bunch of them in here, so you got to be real careful what you're looking for. You're looking for this guy here. You're looking for this guy here. The 42.80. It might have been this one here I was looking for. Right there. There's two overlapping ones. One here, and then the next one's right there. Then there's another one up here. These are all little areas I'd be looking for a price to reach for. All specific data points that I'm looking for. There's the 42.81. So in order to get that, I want to see this consequent encroachment or mean threshold hold price. See how it traded through that? I go, nope, we're going to go lower into this level right here. I want to make sure that that level doesn't get closed below. If it does, then I'm definitely coming lower, reaching for this guy here. It definitely closed below it right there. And it traded below our first highs are taken. There's your first BISI reversal setup I showed you. So if you're trying to go long, it's already telling you, nope, I've closed below the mean threshold of this. There's one. And I'm closing below the first BISI. So I'm definitely going short. Yeah, so those targets aren't reachable until I get confirmation that this holds. If this held here, went higher, took this piece out right there, and we closed above that, used that as support, I'd be targeting these areas right here, all ties, and those premium objectives. They didn't, so now you start targeting all the ones that are inside the smaller ranges here, and once they get validated, targets are reaching for here, and there might be a little tiny one there. These are overlapping, so there's one right here. So there and there. That's what I'd be targeting for next. So now you got these lows taken. Watch this. Does this now become a SIBI? See if that closes or fills in. If it closes, then you want to say, does it close above that? Then I'm back inside this range, hunting for SIBI to BISI. Or at least this breaker here. Pull your fib tool and have a look inside that. If that makes any sense. All right, let's get back over here. You guys are probably looking for me to get back over here with all this babbling I'm doing. See how sensitive this level is on the hourly? See that level we've been looking for? Look at how sensitive that level is. You trade anywhere else, stop right on there. Now I want to see that keep coming lower. Pull your fib tool, low to high. See, now for me, all the lion's share of the day is done. Yeah, you can get lots more, but that's the lion's share of the day. Look, there's 50% retracement back inside that small range, right off the fib tool 50. I think, my friends, my first show back, I think we've done pretty good. I think I've given you guys some really good trades this morning. So I hope you've enjoyed them. And I'm going to go try and, once again, get some sleep. Thanks for tuning in. Thanks for joining me, you guys. Please hit the thumbs up, like button if you like the show today. You're very welcome, Melody. You come every day, and I'm just here to help you out. No one's here to take any money from you. I'm not here for you to pay for anything. I truly believe in, hey, it works for me and it can work for you and it makes money for you, great. If it doesn't, don't put your money on the line until you understand your own self for trading. Otherwise, no one's here to try and sell you anything. So we're here I genuinely believe some things in life are free, but it's not free because you have to put the effort and the time into being here. So I appreciate every one of you for turning up. Robert, yes, I'm back. Thank you. Thank you. Thank you, sir. Thank you. Thank you. Appreciate it. I think I'm going to head out now. Be careful now because it's 11 o'clock. We typically want to see a run on this level here for 11 o'clock. I want to see the nearest level get taken on the downside. So I'm looking for this level to get taken for 11 o'clock. Trade back into a discount. We have a discount breaker right here. If we finally trade through that, look for this discount box down here. And lunch hour may take out these lows. and then get a reversal and go higher. Start reaching back up to these higher time frame objectives. But again, wait for a low to get taken and just practice it, Melody. Don't put any money on the line. Trust me when I tell you this. Ignore this stuff. Go into your settings and turn that off. Do not be enticed by buying and selling. You're not training your brain the right way. If you're hitting these buttons already, you're not training your brain right. Train your brain to look for this, because when you hit those buttons, trading is totally trades differently now. Now you're trading, you got emotion on the line. When you've got your money on the line, those buttons are a whole new different level of trading. Practice this. Don't add that crap to your brain. Don't start ingraining that into your neurology yet. We want to get your brain to recognize really good key turning points that we can tag and catch for little runs. And you start to recognize when these levels get broken to the downside, when you get support off of them, when to get in them. So we're looking, again, we are looking for a run on this lows. 11 o'clock tends to make a run on the previous, the most recent or most significant, there you go, most significant run on the 10:30. And yeah, there it is right there. So I'm going to do a mic drop there. Told you. And yeah, so get rid of that thing there, Melody. If you're just starting out and just focus on the setups, then we'll introduce this and we'll introduce it to you on paper. Get in the habit of marking up your chart for specific levels. Because if you cannot mark up your chart and hit a specific level and it goes through that level before you even hit that magic button over there to make money, you can guarantee you're not going to make money. If you can't make it here on paper and pick these spots that we talked about, putting money on the line is just going to add more stress to your life. And it's really not the way to train your brain. So I want you guys to get this like solid in your neurology so you feel comfortable when you make a trade. That's a rare statement to make with people. How comfortable can you be when you put your money on the line? We want to get you there. So, thanks, but kindness is so valuable. See you on Thursday. I'll see you tomorrow or Thursday. Hadi, pleasure seeing you again, my friend. 509 is 15-minute order block. 509 is the 15-minute. Let's have a look at that. Yeah, I see you. I see you, buddy. $509, where are you at here? You're looking right here. Yeah, if this doesn't hold, look for a target here. Run these lows, aim for that target, and then look for the next target down here at 415. Then 417 to 384. Let's see if this holds, though. It'd be nice to see this come down into here and then bounce off of that. That's been run out now. That's exactly what Michael talks about for an 11 o'clock run. Thank you. The need to hit, then reverse the upside. Out now. It's me, Abs, just using my son's computer. Oh, Abs. Abs is back, buddy. We just talked about you this morning, man. I hope everything is fine. Hope you're doing well. Yeah, we're all doing great. Oh, it's so good to see you, man. Thanks for popping in. Yay, Abs is here. Thanks for tuning in, bud. I hope everything's well. I hope, did you Are you back to work? Are you on the grind again? Grinding away at the wheel? I hope you're doing well. Pop into the channel there, have a little chat. That'd be good to see you again. So until tomorrow, I usually stick around here till 10, but my brain's kind of cooked now, and I'm losing my voice a bit. So jump into the channel there. Hadi will be on there. He'll guide you through some of the stuff. Same with Kevin and Lambo and the boys. They're all in there. Russell's in there. Give them a chat. They're there to help out wherever they can. And I will see you guys bright and early tomorrow morning. Thanks for tuning in. Appreciate all of you. Thank you so much. Oh yeah, where am I going to go? I got to check it.